September was an awesome month if you love stocks being cheaper. The Dow was down 3.74%, including dividends. The NASDAQ was down 5.75%, including dividends. And the S&P was down 4.94%, including dividends. And everybody asked me, Paul, why is September such a bad month for stocks? No idea. I don't think it really matters. I don't think there's anything that has anything to do with any sort. I don't care. What I'm here to teach, what I'm here to talk about is long-term on the markets. The Fed kept rates the same, but with the indication that they're going to stay high for longer and potentially still going up. Neil Kashkari, who's from our area, who's the Minnesota Fed governor, he has said he thinks that rates should go significantly higher.
Yeah.
I think he said significantly higher, but either way, guys, just remember, 2 years ago, less than 2 years ago, rates were at 0%. Now they're at 5.25 to 5.5, and yet the market's down less than 10% from where it was when rates started to go up. Isn't that incredible?
Yeah, it's very weird.
I mean, we saw a big drop last year, but now this year has seen a massive boom, a massive jump in AI. And who wrote recently? I was on Twitter, and I wrote on there. Somebody wrote, some big finance guy who's been around for years said, in my 40 years of being here in the markets, I've never seen more fear. And I was like...
That was the guy from BlackRock, was it?
Was it BlackRock?
I think so. I can find it.
I literally wrote in there, I'm like, was he not around on September 12th, 2001? Was he not around on March of 2009? Was he not around during March of 2020 with COVID? I'm like, what are you talking about fear? And then I got a lot of people commenting saying, Paul, remember this guy wants to put this out there so he can get more money in for his business. I love the fact that my followers like basically saying, this guy has to say this for career reasons. And I was like, okay, valid point. But guys, fear out there? I don't see fear. I don't see any fear. What I see is people going, okay, it's, we're going to rebound here. We're going to be fine. I mean, I think somebody came out recently, some major bank said that they see market going up 19% next year. I have no idea where it's going to go. All I know is based on valuations, we're still 72%, going back to 1929, 72% above historical valuation metrics. Was it
Larry Fink?
Oh, was it Larry Fink?
Yeah,
oh my God, Larry Fink.
BlackRock. I remember seeing that too and going, what?
That is literally the dumbest statement I've heard.
Yeah, and if there's fear, I'm not seeing it.
Well,
I mean, there's some fear, but it's not like an ungodly level of fear.
So there's different levels of fear, guys. Like you said, the fear is, where stocks going to go? But you don't see fear of people going, I can't be in stocks.
Right.
That's the fear that existed.
This is going to go to zero.
Yes, that was the fear that existed in September of 2001 because our nation was attacked. That was the fear that existed in the great financial crisis of 2009 because people thought our entire system was done. That was the fear that existed in March of 2020 when everybody thought the world was going to shut down.
Right.
That's fear. Fear of like, a 5% pullback. That's not fear.
It's just like the unknown.
Yeah, that's just, okay.
This is typically what markets should be, just the unknown.
Isn't it unbelievable?
Yeah.
It is absolutely, truly incredible to me.
Funny.
So, big down month for all indexes. Got it. I look at today. Here's what's interesting about today, Mo.
It's mixed.
Well, the NASDAQ's up 0.76. The Dow is down 0.17. The S&P is up 0.16%.
Right.
This is weird. I mean, this has been happening a lot lately where you see the NASDAQ will be down a lot, but the Dow will be up or vice versa. It's just a very weird thing going on in the markets. Remember, guys, our focus is the long term. There's no way we're going to predict what's going to happen. I can sit there and make predictions on what I expect to happen in the next 10 years, but all I think based on valuations going back to 1929 is if you expect the last 10 years to replicate, it's highly unlikely. Highly unlikely. Does that mean it's not going to replicate? No, of course not. But it's very, very unlikely that we're going to see the same returns in the next 10 years that we saw in the last 10 years because of how overvalued we are today. Not based on where we grew in the last 10 years. It's where we are based on today's valuation metrics. Okay? Now, does that mean there's no good stocks to buy? I'm buying stocks. I'm buying stocks every week. I want to buy more stocks, but right now I'm buying stocks. But I'm just ready and preparing myself for a future that's going to be very volatile and could be sideways for a while. That's what I'm banking on. And I'm okay with that because your job as an investor is to never try to guess what's going to happen. Your job is to find either dollar cost average in a low cost ETF no matter what happens, or find companies that are selling for a good value based on an estimate of their future cash flow and buy them. And if they go lower and your thesis is still the same, what do you do, Mo?
Buy more.
You buy more. Is that hard to do when stocks are going? Yes. You know why? Because the story when stocks are going down is going to be a story that's going to be, well, wait a second, I bought based on. The hard part is looking at Mr. Market and saying they're overreacting. Because remember, news follows the stock price, not the other way around. If the stock is going down, the news that justifies this will start to pop up, not the other way around. The news doesn't happen and the stocks fall with it. The news follows the stock price. That's always, look at Meta, look at Tesla. Everybody was blaming the purchase of Twitter for why Tesla was $100 a share.
Right.
I don't hear that at all anymore.
Nope.
Everybody was saying Zuckerberg was the worst CEO back in November of last year because Facebook was below 100. I hear now he's brilliant again.
Yeah. Going back to the Twitter one, they said that if he buys this company, if Elon buys Twitter, his focus is going to be on Twitter and not on Tesla. Where's the talk about that?
Yeah.
Nobody says that anymore.
Ironically, today Tesla missed some delivery numbers and their stock is down.
Ooh.
But I look at the saying, guys, what we're here to teach, what we want to talk about is the process. Our process is driven basically with one fundamental belief, that price and value are not the same, right? So our goal is to buy when price is below value. We believe that for the vast majority of stocks right now, it's this way. Price is above value. And when that happens, and when you buy when price is above value, you're probably gonna have a hard time making a good return. Now, when I say this, it doesn't mean you have to buy an 8 PE stock. No, you can pay 20 times earnings for a company and still be underpaying for the company if they're able to grow their revenue and profit at higher growth rates. Don't fall into this trap that value investing means that you're buying something dirt cheap based on an earnings multiple. No, it's based on buying a cheap price relative to the potential growth of the company. It also means you can buy a declining business at a very good price.
True.
It's harder.
It's very hard.
But if you can buy, everything has a price to it. Could be positive, could be negative, right? Yep. If for this cell phone right here, the iPhone 15 just came out. How much did you spend on that thing?
$1,200.
$1,200 for an iPhone. Mo basically bought a $1,200 new cord, right?
Yeah.
Because you want
a USB-C. The only reason I got this was for the charging port.
So is the battery better now?
Yeah, the battery's better.
Is it?
And it doesn't, if you look on the side.
You're 46%, by the way.
Yeah, I don't charge
the volume thing?
The volume thing. Above it, that little switch, there's now there's a button instead of the little flicking thing back and forth.
Oh, good.
But either way, I bought it because I needed a USB-C.
Needed.
Necessity. There's needs and wants in this world. That was a need.
So, Mo paid $1,200 for that phone. Mo, if somebody offered you 10 of them today for $200 a piece, would you buy them?
Buy them all.
If they offered you 10 of them today for $100,000 a piece, would you buy them?
I would not buy any of them.
That's the theory behind it. Same phone, same everything. Price is what's going to dictate whether it's a good value or not. That's the whole key here. So, on this channel, that's what we're trying to accomplish. If that makes sense to you, if you like this idea, we do 2 videos a day, sometimes covering the economy, sometimes covering the general stock market, sometimes covering individual stocks. If you like that, all I ask you to do, subscribe to this and watch our next video that comes up here, because we love talking about investing and we love the fact that in the last 2 years, it has finally started to become this market that we sat there and said, the workhorses, the tattooed chef, all the companies we warned about back in February of 2021, saying, be careful. Look at Peloton. Peloton skyrocketed to $5 when that idiot, Tom Nash, sat there and said at 170 that Peloton's going to the moon, that he was all in on Peloton. It's like, oh, nice job. And now he's pumping Palantir when he was pumping it at 45. Now he says, look at it, it's 15 now. It's like for all the people who were haters on Palantir. And I'm like, you were a promoter of Palantir at 45.
Yes, you were.
Okay, sounds good. So anyways, guys, doesn't mean I'm not going to be, my stocks that I buy will go down. The difference is I don't need my stocks to go up for me to buy more shares. In fact, I prefer it the other way around. I want my stocks to go down, and that's why I buy more shares. So subscribe to the channel, watch the next video. I appreciate everything you've done, guys. Take care.